Hey everybody, Ace here. I'm going to tell you how I make $2,000 a month trading options and what I consider the safe method of trading options. But I don't really know if there is a safe method, but I consider it. When I first heard about trading options, I heard of two different stories. There were either kids off of Wall Street bets who were YOLOing their money left and right, trying to get rich quick by getting lucky, or there'd be people making tons of money, 20, 30, 40 times their return trading options, and I just thought they were getting lucky. But little did I know I was wrong. As time went on and I continued to research and learn about options, I learned there are different strategies and methods to be trading them. I realized that there was a way I could reduce my risk while trading options and consistently make money doing it. So now I'm going to walk you through how I make an additional $2,000 a month trading options. And this doesn't include my swing trading stocks or any of my dividend portfolio. This is just strictly trading options. And I also want to preface this video by saying this is not financial advice and this is made purely for your entertainment purposes only. Now, let's get into it, shall we? The first way is by selling covered calls. Now, this is my absolute favorite method of trading options, and I think it's one of the easiest ones to understand. I'm gonna run through the basics of how I sell covered calls, but if you want more of an in-depth guide on selling and trading options and what all the different numbers and figures mean, I would personally recommend either In the Money Atom or Project Option. They have great communities and fantastic videos on how to trade options and more in-depth guides to it. But for the purpose of this video, I'm just going to briefly go over what I look for and how I trade them. Here is an example of a covered call I like to trade. The first thing you're going to need to do is own 100 shares of a company you want to sell a covered call with. This could be any company that you want to trade options with or could trade options with. For example, Apple, Nike, AMD, Snapchat, Boeing, Disney, just to name a handful. And myself personally, I'm using Robinhood and Webull to trade options, but for these examples, I'll be using Robinhood because I feel the UI is a little bit easier to understand. Stock ticker is going to be PLTR. This is Palantir Technologies. Now, what I'm going to do is I go to trade options and I make sure I pick up at the top, sell a call. And then I choose the date I want it to execute by. So for me, I'm going to choose the February 5th date. That is roughly 2 weeks out. I'm going to be looking for a delta of 0.3 or 0.4 and to make sure that there's good volume and open interest. So basically I'm looking for a good premium, which is this amount right here. And then I want to make sure that there's good volume and open interest, just to make sure that my option will get purchased. The premium is the money that I get to keep no matter what happens. In this example, I'm going to sell one contract or 100 shares at the price of $35. And I get a premium of $209 per share, or $209 because one contract is 100 shares. Once this order fills, I will make $209 in premium. That means I get to keep $209. And as long as the stock price stays below $35 by February 5th, I get to keep the $209 plus my 100 shares. If the price goes above, I will have to sell my 100 shares at that $35, but I still get to keep the $209. So more or less, I'm willing to sell 100 shares of that stock at that $35 and I collect $209 for it. If the stock closes above that price, I will have to sell my shares at that $35, meaning I still make a profit from what I purchased the stock at, which is around $28, and I have to sell at $35. And I get the $209 in premium on top of that. It's really a win-win for me. So the first method I use to make $2,000 a month is selling covered calls on stocks I already own 100 shares or more of. And the second method is selling cash secured puts on stocks. This is just like a covered call, but instead of using your 100 shares, you have to put up cash as your collateral. So here's an example of a cash secured put that I'm looking at doing. The stock is NIO. NIO is the ticker. I will choose to sell a put, and then I get to pick a date that I want it to execute by. For this example, I'm going to do February 12th, which is about 3 weeks out. Then I'm going to look for a 0.3 or 0.4 delta with some decent volume and open interest to make sure that the likelihood of the stock hitting that price is a little bit lower and that there's people actually trading this option. So I'm going to choose the $57 strike price, which is right here, with a 0.3 delta and more volume than the previous one above. When the cash secure put executes, I'm going to make $2.83 per share. But remember, with options, one contract is 100 shares, meaning I'm going to make $283. That's going to be put into my account right away. Now, to buy this contract, I'm going to need to put up my money as collateral. So the 100 shares at $57 per share, that means I need to put up $5,700. Now you might be thinking, Ace, putting up $5,700 to make $283 is not worth the return. Well, if you do the math, you're making roughly a 5% return on your money being held up for roughly 3 weeks. Are there other things that you could trade to make a better return on your money? Potentially yes, but for me, I think this is a very solid, consistent way to make money and not have to risk so much. And the thing is, you could choose a higher strike price to collect more premium. I'm choosing a lower strike price, so the probability of it executing is going to be a lot lower, but you could pick a higher one and get a much larger premium. You just have to be comfortable at buying those 100 shares at the price you choose. So for example, if you choose the $59 option and it executes, you're going to need to put up $5,900 in collateral, and if the price of the stock closes below that $59 on the date you picked, you're going to have to buy the shares at that $59 point. So it really comes down to what you're comfortable with doing. Do you want to make more premium? Then go ahead, choose that option. Myself personally, I like to pick things further out, so the likelihood of that executing is little, so I get to keep the premium and my money. And that's really all I do. I sell 3 to 4 covered calls, and I sell 2 to 3 cash secured puts to make $2,000 a month trading options. Some people like to call collecting premiums Theta Gang, but I just like to call it easy money. I'm joking. But this is a strategy and it does work for me. So I know I briefly went over how I trade covered calls and I sell cash secured puts to make $2,000 per month. I will be making a short tutorial on how to sell covered calls in Robinhood coming up soon. And in that video, I'm going to go over a little bit more detail on what you need to know and how I trade those covered calls. If you liked this video or learned anything, please just tap that thumbs up button for me and subscribe for more content. Leave me a comment down below if this stuff confuses the bejeebers out of you and if you have any questions. And until then, I'll see you in the next video.